Hey, hello, welcome back to our channel. In this video, I'm going to discuss a simplest way to figure out growth stock for short-term and long-term opportunity. So for this, trust me, we don't need much fundamental analysis knowledge or technical analysis knowledge. I'll keep it in very simplest way. So let's dive into our video. For that, actually, we need to go to Screener website. So let's go to the screener.in. So this is the Screener homepage. In here, we need to go to the screen section. So here actually they already given some of the default themes. We are not interested on that. So let's create a new screen for us. So in this screener, so what we are going to define is, so if any stock, both FAIs and DAIs are interested, then definitely that is a fundamentally strong stock. Why? Because FIS and DIs are the ones actually they have like a highly paid research analyst. So because actually they are investing a lot of money, crores of money in that, so they pay a lot of salary for research analysts to research about the company. So if we go with them, definitely we will be get benefited a lot. Okay. So first of all, what we need to do, so change in FIS holding is greater than 0 and change in DAS holding should be greater than 0. What it means is both FIS and DAS has increased their stake in this current quarter. That means they both are interested. And then for any growth stock, it should be the current price should be greater than 200-day moving average. Okay, DMA is 200-day moving average. And then so this checkbox, so we are interested only those companies who has like latest data. Okay, and then just run the query. So here actually we got like 75 results here. So what we need to do, go here in the edit columns, because we are not interested on these things quarter on quarter and sales growth, and then ROC. So we are interested in PE and market cap and dividend yield only to export this one. Why? Because the logic is simple. So we should not see directly this percentage, because this percentage is based on the market cap. They must be increased. So we also need to calculate based on the market cap. That's why we are interested in only market cap and change in percentage, because the number of shares they have increased, the amount of stake. So that means they have more conviction on that stock. Now what we need to do, just select all the data one by one and then copy to Google Sheets. So if you go in the Google, just type Google Sheets, so and click here, you will launch to your Google Sheets website and then click on the blank one. Because of the video length, I already copied all the data here. So here what we are going to do is, so we are going to take the average increase of DAs and FAIs based on the market cap. So how we are going to do is, so don't worry about this formulas and all. I will share this Google sheet with you, so you can actually refer this Google sheet. Okay. So first we need to select the market cap into average, means FIAs plus DIAs by 2. So we are going to add both FIAs and DIAs increase by 2 is average of them in times market cap. Okay, click enter, and then Google Sheet will ask by default to fill all the remaining rows as well. Click OK. Now let's put some name here. So percentage increase. And then now what we are going to do is select the last column, the I column, and press Ctrl A, and then go to the data and create a filter. So now what we are going to do is filter in descending order. So here if we click on the sort by descending order, now we already got like top FAs and DIs interested stocks. So once we started by descending order, already we got like a DIs and FAs having the highest stake in this. So we need to do one more filter here. So those are not paying dividend yield. So we are not at all interested. So the one with zero, just uncheck here and click OK. So we further nail down to the proper growth stock. So now we filtered out all our stocks. So we already finalized our stocks. So from this, what we are going to do is, so we'll see technically which are strong. Okay. And then now coming to TradingView. So this is actually tradingview.com, the chatting website. So in this TradingView, what I'm going to do is simply I come here to add the indicator and then type EMA. So we will get like a moving average exponential, and then in here in the settings icon, if you click that, so instead of 9 just type 62. So the logic behind 62 is, for any quarter there will be 62 trading sessions. Okay, for in any quarter there will be 62 trading sessions. That means, so if any stock by quarterly results, if it is performing well, this will be always above 62 period EMA. Okay, that is the logic here. That's it. So from our stock list, so pick up any stock, for example say Dixon Technologies. Okay, so if you see Dixon Technologies, okay, now so this stock actually from January and December 2022. Dixon Technologies, actually it was in downtrend here, you can clearly see, and then in recently in May actually it came again into the 62 moving average period. Okay, so you can also observe the volume, the amount of volume here. So that means, so somebody is expecting good quarter, so all institutional are interested in here. So you can see the rally once it moved up, so you can see the rally here. So if you want to enter, actually this is the right place to enter right now. So because it again came to the 60-day moving average, the risk is very minimal. Okay, so this is how we need to we can actually plan the trade. So we need to see all the other stocks, so which are like above 62 moving average, then actually we can take the trading decision. So let's see some of the case studies happened before. So one of the best stock happened to me is Apar Industries. So if you see Apar Industries, so if you observe this stock, actually in 2022 May, so until that it was in downtrend, and then in 2022 May actually it crossed 62 moving average, and also the volume happened here. This is what exactly, once this breakout happened, so we can actually take the position here. So 817, and then it rallied up to, you can see here, it rallied up to 1500 levels. So okay, so even this fall is because of the Russia Ukraine war. After that, this whole downtrend actually taken out with the single day candle, and then again it came back to the 62 moving average area, and still it is performing well. Okay, so this is how it acts like a support. So based on this, we can actually keep the stock until it closes down the 62 moving average. So that's how actually multi-baggers formed. So if you see another stock, if you see Hindustan Aeronautical Limited, so this is actually I'm discussing for the short-term opportunity. So you can see here clearly. So it was actually, so Hindustan Aeronautical Limited, after a sideways, so here actually there is no big candle happened. So here if you can see, there should be a big green candle happened here. So this is the sign actually some in big institutional investor actually entered into the stock. So you can clearly see after this rally, so you can see this volume accumulation happen here, and after that if you observe, so it keeps going and respecting the 62 moving average, and exactly in this 22 December 22. So it came down. Actually, we can book profit here. So even this, even up to here, we got like 1200 points already. So this can be a short-term opportunity. So I explained like one short-term opportunity and one multi-bagger. So which both actually respected 62 EMA. All right. So this is what I want to discuss. So this is actually the simplest way. So we can figure out the multi-bagger stocks or short-term opportunity stocks as well, based on how stock has behaved. Okay. So I hope you learned something in this video. So if you like the content, and if you think some of your friends may be beneficial with this content, please share and subscribe to my channel as well. Okay, thank you so much for watching.